Hey there, everybody. This is Donald Consoli from BlackOrchidFX.com. And if you haven't checked us out, go ahead and head over to BlackOrchidFX.com. Now, that site will be released August 1st, 2019. That will be our grand opening, if you will. So if you're listening to this after that date, please check it out. No commitments necessary. Feedback is appreciated regardless. So today, the real reason I'm here is to talk to you about price structure. Now, if you aren't familiar, price structure is created by price movement, and price movement is the flow of price through time. So we're going to talk about some general concepts to get you started, basic understanding, and hopefully you find some value with this. So let's jump in. As price moves, it can only go in three different directions. It can go upwards, it can go downwards, and it can go sideways, or ranging consolidation. each time price moves up, down, sideways, as it ebbs and flows, it's going to put in these peaks and valleys. Now, these peaks are what we would consider to be levels of resistance. Price has moved upwards, has hit a spot, has turned and gone in the other direction. That is called a level of resistance. Now, the same holds for the opposite direction. As price moves downwards, hits or pauses and then turns, it has hit a level of support. Now, you can think of support as something being held underneath, so to be underneath price, and resistance to be something that's hard to break through, as in hard to break through a ceiling, a price ceiling. So support and resistance levels. Now, we have two classes of support and resistance. There's going to be your major levels, and these major levels are going to be the well-defined, pronounced areas where price turns and where price hasn't visited very often in the past. Now, a lot of people will say to look left on your price chart because structure will leave clues. But for major support and resistance levels, this is not going to be true. Well, usually not. Major levels of support and resistance may not have price to the left because, well, price hasn't been there very often. So if price happens to make its way back up to these levels, there's a higher chance that it's going to pause and reverse at this level just because price has not been able to reach these heights or these lows previously. Now, the next levels are going to be your minor levels. These minor levels are going to be far more abundant. They're going to be less defined. They're going to be a little harder to spot. They're going to be the ones inside of trends, so they're going to be the ones in the bulk of price. They're not going to be at your extreme highs or lows, but they're going to be significant nonetheless. And as I have come to find out, they're going to be a little more significant the more recent they are in price structure. So if we look at a series of ebbs and flows and using our newfound skill of being able to identify support and resistance levels, we can see how they can change over time. So if we take our first level here of resistance, and we extend it over to the right, we can see that at a later time it actually turns into support as price continues upward in an upward trend. Now, if we see this happening in a relatively small range of prices, we get multiple levels of support and resistance together, we can identify a very helpful area on the chart that we call a support and resistance zone. Now, the reason the zones are important is because these support and resistance levels are never going to respect a singular price very often. The markets are imperfect due to the imperfect understanding of the participants in the market. So if we can identify areas on the chart, small areas, small range of prices on the chart where price is likely to turn or respect, pause, whatever it may be, then we'll definitely have an advantage in our analysis. So let's take a look at some examples on a live price chart. Let's get away from the diagrams where they line up perfectly because that's how they were drawn. They were meant to be lined up perfectly. So in live price charts, you're not going to be that lucky all the time, any of the time. Most of the time, it's just going to look like a random mess. But if you stay on it, look over and over again, these things are going to start popping out to you. You're going to be able to identify these levels of support and resistance in the zones much easier. And there's no one specific way to define a zone. It's whatever works for you, whatever helps you be a profitable trader over time. You know, one person's zone might be an in-between zone for somebody else, but as long as you're consistent, you should get consistent results. So stay consistent with how you identify zones and apply it through all of your strategies that use zones. As you can see here, and you know, and let it come naturally. Let it happen easily. So if you're looking at all this price right here, you shouldn't be like, oh my god, you know, which prices are, or which, you know, which areas are consistently touched over and over. Where's that tight range of support and resistance? You know, if you just look at it, you can see that here price tends to consolidate. You can see these places where price turns or price consolidates, you know, moves sideways. You can see these, they should pop out to you. And then it's all about just being able to look to see where they tend to turn and share price. So what I mean turn and share price is you can see that there's an area of support right here. You know, price comes from above and turns, so the support is underneath. Now, if you just travel over to the left a little bit, you'll see that right here shares price with right here in this level of resistance. So basically, in the same area with shared price, at one point found resistance at that level, and then another point found support. So this would be a good area to look to identify a zone. So we want to take price, as much price in common as possible. So come in here and find your lowest points that match up with previous price here. So you know, we're going to have some structure that's going to help us define the outer limits of our zone. So I see that these wicks right here, they can give me an idea of where to define the lower part of my zone. And if I stretch it out and encompass those two spots that I was talking about, and just keep going over to the left, and you'll see how just uncanny it is that price finds, respects, dances, stays, everything in these zones. It's literally, it seems impossible, but it happens over and over again. If you do spend some time on the charts, you'll see for yourself just how often price tends to find these areas. So here's that level of support that I was talking about. Okay, clearly in the zone, defines the better part of the bottom of the zone. You see here price was above it, hits the top, bounces off, pretty close to hitting the top here. We got price that shot straight through it, didn't respect it at all, which is going to happen also. You know, it's not always going to be respected, but you can see that there is definitely influence here. So they are areas on the chart that you should pay attention to, you should use in your analysis, and get very familiar with. So we come over here and we see this is that resistance level that I showed you earlier, and it lies right within that zone because that's where we drew the zone. But the reason why this becomes valid is because it happens so many times over and over again. You see that here price comes down, finds support on the top of the zone. Now if we keep moving price, we can see what starts to happen. We move our zone further and further left, you're going to find more and more places that lie within the zone like it was supposed to be there. Again, we see a perfect example where price comes in, finds support right perfectly at the bottom of the zone. And I mean perfectly at the bottom of the zone. That's the zone that we defined over here. I didn't change it to try to encompass all this price. It just happens in these areas. And you can see price, you know, even though it came out of the zone a little bit, but in the general area, this one, perfect, again, perfect example. Came down, hits the bottom of the zone, continues up here, finds support on the top of the zone. So I don't think I need to keep going any further. You can see that this happens regardless of where you find it on the chart. You're gonna find similar price. You're gonna find that level respected at some point. You can do it with major zones, minor zones. This would be a good chance to show some major zones while we're in a live chart. This is what I was talking about here. You're gonna see this is a major level of resistance right here. Why? because it's at an extreme of recent prices. It's near extreme highs. You know, price doesn't just keep continuing up here. It reaches these levels means that it becomes either way overvalued at this point, returns back down to pedestrian levels. But you can see not much happened on the left. Easily identifiable, very pronounced, very well defined turn. Major level of resistance, major level of resistance, major level of support, major level of support. Now, if we want to look for the minor levels, you see anything basically in between those. And we've got some minor support here. As you can see, it happens inside of what I like to call inside of the price structure here. Some of it happens, you know, it can happen outside also here. These are going to be your more minor levels here. So, but they all play a part. They all have significance. They all will have influence. The major levels are going to be where you're going to have the most amount of influence, because if you can see price gets up to this level again and see that price just does not really happen up here, then this is going to be a very, very good area, not just for you, but for the millions of other traders that are looking at this area to look for sell opportunities. So let's move on. I'd like to talk a little bit about price influence, whether or not it is relevant, to the current topic. I mean, it is relevant, but whether or not it fits perfectly into this video or not, it's something that should be talked about. It's fun to talk about. So I just wanted to point out a few reasons why price may be influenced. What actually causes the markets to move? Now, the first one, well, not necessarily the first one, no particular order here, but the first one that came to mind as I was putting this together, it's going to be your whole or psychological numbers. Now, these numbers are going to have influence just based on their appearance, their, what I like to call their prettiness. They're pretty numbers, and what I mean by pretty is they are easily identifiable. They are a type of number that your eyes are going to be drawn to, that your mind can easily index and categorize for later recall. It's also going to be the types of numbers that are displayed on your price axes on all of your charting software. There's not going to be any charting software that's gonna you know, divide your axis up in odd numbers. It's not going to put a tick mark at 1.52764. They're going to use the whole numbers. So that's the reason why those are going to have influence, and the reason those have influence is these numbers actually don't have influence on their own. Nothing has influence on their own except for the people making the moves in the market. So the people making the moves, they see these numbers, they act at these numbers because they expect things to happen at these numbers. And if it seems a little catch-22-ish, that's because they are considered to be self-fulfilling prophecies, just like most things, fibs, which we'll cover next. Whole psychological numbers, they are going to be mostly self-fulfilling. And what self-fulfilling means is that due to no outside influence, you know, prophesized happenings take place because there's direct obstruction based on the parties that are doing the prophesizing. Okay, a little confusing, right? So if you expect something to happen at 1.5 flat, you expect price to change there, and then you and millions of other traders think the same thing and take action and put orders in to either buy or sell, whichever way price is going, at this number, then obviously because of the flow of orders coming in, the price is going to change. So there's no magical market guy in the sky saying that price is going to turn at these whole numbers, but the, you know, cumulative action based on all of the traders that are trading, if they're looking at the same levels, then price is going to be influenced at those levels, self-fulfilling. Okay, I mentioned Fibonacci. So Fibonacci ratios, which definitely will be covered at a later date. Too much for this one, not actually super relevant to this But just know it's similar to the whole or psychological numbers in the fact that a lot of traders are looking at these levels. A lot of traders use these levels in their analysis. They use them to make decisions on their trades, to get in, to get out, stops, whatever it may be, stops, targets. I use 0.618 because that's going to be one of your biggest ratios. So it's 0.618 or 61.8%. There's also the 1.618 extension for a lot of people who trade trend continuation. But again, these are going to be self-fulfilling in nature. There's really nothing that outside of our own actions is going to cause price to turn at these levels, except our expectation of something happening. Expectation and action combined causes the price to move. Now, a lot of people are going to say, okay, retail traders, they're not going to be able to have enough volume to really influence the market that much, which may or may not be true. Who knows? Half the people are going to say it will, half the people are going to say it doesn't. But there's really no arguing this next one. The big banks, the big players, the big fish in the sea, the guys who are trading in millions and millions of dollars. And yes, they all have a big dollar sign on the side of their building. I'm pretty sure that's a fact. But when they make trades, they make big splashes, and you're going to feel those ripples. So when they get in the market changes. They're going to have direct and indirect influence on the market. Some of it is, just inconsequential. It's commerce, it's trade, things that are happening. Money is changing hands to pay for goods and services worldwide. So all of that takes place in the market and causes the price to move. But know that these are the ones that are really making the price move. So you should be asking yourself at this point, why is this relevant to me? If you learn anything from anybody, make sure that they teach you why. Why is it relevant? The logic behind what you just learned. That's the key to application later on. When you run into those infinite number of variations, no situation is going to be the same. So when you run into those situations where you haven't seen specifically in someone's training material or whatever, make sure that they teach you how to use it logically. So structure, how does it help? How does it help you as a trader? Well, the most important part is going to be in your set of questions that you ask yourself before you enter a trade. It's going to give you the where, or it could give you the where. It depends on how you trade, but it's a very, very useful tool in determining the where. And by where, I mean the entries and the exits. So your entries, obviously, is going to be the spot on the chart where you're looking for an entry reason. Again, you're probably not going to know that unless you have put together a trading strategy. If you're just entering randomly, you can probably just slowly kiss your account goodbye. But anyways, entries. Okay, so now exits. Exits going to be probably the most important part. You can enter anywhere on the chart, and if you just make a random entry, you're pretty much going to have a 50-50 chance of whether it goes up or down. How far it goes up and how far it goes down, that's the question. And that's where structure helps play that where part on the exit. So the exit's going to be the place on the chart where your analysis, and always by analysis, where your analysis says price is likely to go, whether you're right or wrong. So the trick for trading, obviously, the trick for profitable trading is going to be your winners got to be big enough to cover a lot of your losers. So you want to cut your losses short and you let your winners run. And structure is going to help you find those spots. It's going to give you the confidence to let your trades go, your winners go. It's going to give you an idea of where you should expect your winners to go and where to get out. And it's also going to give you an idea of where you need to get out and cut bait when you're wrong. And you're going to be wrong, accept it, get over it, get on to the next one. When you're wrong, just make sure it's not too big of a wrong that it's going to make your wins insignificant. So that's going to be the big reason why structure is important and how it can give you an edge on the actual trade mechanics, the entries and the exits. And these are going to be, it's two of the three biggest reasons or biggest factors in whether or not you're going to be a successful trader. So entries, exits, and trading psychology. Basically, if you have those three things, somewhat figured out, you got a good chance. You got a good chance of being better than the bulk of people who attempt to do this very difficult thing we're doing. Now, that should just about wrap it up for this very basic introduction to price structure. This is just going to be overarching concepts. Definitely going to get much more in depth with some future videos, but you know, if you found some value in this, if it helped you out in any way, even if you liked anything about it, give us a like, please. And if you are so kind, give us a follow. We could really use the bump in initial support. And we have plans to put out some very good informational content. Many more videos to come. Much more value to come. That's gonna wrap it up. So thank you for joining me. Thank you for listening, and have a great day.